Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Monday, November 8th, 2010. This morning I'm talking about European debt woes are back in focus. And what that's doing here is that's induced a bit of risk aversion this morning in the markets. As you see real quick here, we're looking at daily chart of Euro. You can see that's pulling back a little bit, just broke through 20-day moving average, and it looks like it's going to retest recent lows around 37.5. We're going to see what's happening with there. But basically what's happened is that now that all the big news out of the U.S. is over. We had the elections last week, QE2, that's come and gone, and then non-farm payrolls report. All right, the focus has shifted back to the EU, and what's happening over there is that there is increased worries that there are some fears coming out that the debt crisis in Europe, particularly in Ireland, they're also looking at Spain, Portugal. They may be having problems over there as it's going. So bond yields in Ireland are starting to go higher. You're starting to see spreads over German bonds, or boons, if you will, going higher as well, as people are fearful now that Ireland's going to be close to default. They may need to access the EU emergency facility, just like Greece did, so on and so forth. So that's part of the problem that's happening there. The other problem is that Germany's saying that, hey, wait a second, if this should happen, then bondholders need to bear some of that risk, and that's sort of got people in an uproar a little bit, which is causing lack of demand for Irish bonds, which is also helping push yields higher. So it sort of becomes a self-fulfilling prophecy. The higher yields get, the harder it is to refinance and service your debt. But if people allow this to happen and they keep pushing it higher, then potentially they could push Ireland into default. So we're going to have to keep an eye on this situation, see what happens. But as you can see here, Euro's pulled back. All right, now this has induced risk aversion in the markets. We can see here Aussie USD, that's Aussie's lower, but still above parity here with the dollar. Looking at dollar versus the loonie. All right, and we're just below parity here. So it's about 40 cents away. It looks like for dollar and loonie right now. Okay, we've got the pound. Pound is also lower, but mixed higher versus some of the other currencies that you would expect in a risk aversion scenario. So that's kind of what we're looking at. Now on Wednesday they're going to come out with the inflation report here in the UK, and that's really going to be what the market's taking a look at to see if anything changes. We've got the kiwi lower as well in New Zealand. They've got a problem with kiwi fruit, actually. Coincidentally, they've got some sort of disease happening there, so that could affect exports, roughly $1 billion towards the economy, which could come into play there. So that's what we're looking at. And lastly, we've got Japanese yen strength as risk aversion's on and people are unwinding carry trade. So we're going to see if that 80.25 range holds versus the dollar there. So that's kind of what we're looking at. We're going to keep an eye on the EU. Now, you got to remember that perhaps this is a I don't want to say retaliation, but this perhaps the EU is allowing this situation to help weaken the euro versus dollar. Now, euro's been strong recently because the dollar's been weak. That was based on the QE2, what have you. So, if this European debt crisis picks up, then the euro is going to fall, which that's going to make it better for European exports, which they're not going to mind one bit over there. So as long as they have their hand on the pulse here and they're able to handle the crisis. Now they've got plenty of resources, if Ireland does need to access the emergency facility. So we're going to have to kind of keep an eye on this situation. But that's what we're looking at for today. Overall market weakness. I just want to let you know, we've got a webinar coming out on Thursday morning, 8:30 a.m. Eastern Standard Time, called Day in the Life of Professional Trader, where I'm going to show you what I do to battle the Forex markets on a daily basis. So if you'd like, you can sign up for that. Just shoot me an email at mentor@fxedu.com. That's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.